Hello, everybody. Welcome to Thursday. The S&P 500 was down 0.3% today. And really, we saw kind of a really soft market altogether, nothing dramatic, but, kind of across the board to the total stock market index with Vanguard that I follow. VTI was down, roughly 0.42%. So, nothing spectacularly bad, but it was soft today altogether across the board. So it's a great chance for me to, again, emphasize some of the things that I think are going on that are quite good, that even have happened just this week. So number one, the chairman of the Federal Reserve, Chairman Powell, has been meeting with Congress. They reiterated that they thought inflation was going to be temporary, that they're going to continue to buy bonds and keep rates low as long as they need to make sure that the economy is really doing well. So this is a different stance than they've taken in the past. I think it's a really good thing for the stock market. And so that has happened. And the other thing that happened that's really kind of interesting is he talked about the possibility of creating a digital dollar, US backed digital dollar to compete with the cryptocurrencies. And his quote was, "We probably won't need cryptocurrencies once this happens." So there's lots of reasons people have cryptocurrencies outside of just that, but it is a competitive situation. And so again, the more the cryptocurrencies continue to fall, and they've come down quite a bit, the less people are selling. Somebody who's going to sell their Apple to buy some cryptocurrency because it was going up so much, now that it's down 50%, maybe they won't. And so again, that's a stimulative situation to the economy, to the stock market. I think that's good. And then the other part is interesting. Last year, Americans saved, trillions of extra dollars that versus, what they normally do. And what happened was that, that all went into the banking system. Ideally, it goes into the economy, they spend it, and that might still be happening here coming forward once people really get going again. Or they buy stocks with it, that would be good too. But even in the banking system, it's still helping out because they're going in and they're purchasing these treasuries, the banks themselves. So they were awash in cash with all these deposits that are coming in. So when they have a demand for treasuries, that drives up the price, which brings down the yield. And the yield's gone from 1.75% on the 10-year, for example, down to 1.3%, a little bit below that today, actually. And so again, that's just a situation where the stock market looks better when your guaranteed rate is so low, right? And so people are willing to take the risk. It also often, and especially in 10-year treasury, kind of relates to the mortgage rates, which have come down a bit here. And so that allows, housing to continue to do well. So many industries are involved in housing. And when people refinance, they, maybe have more cash in their pockets. So these are all things that are just happening right now. And there's lots of positives that are going on. Again, I wouldn't ignore the negatives, but this is worth looking at. So I look forward to seeing you tomorrow if you get a chance at talkmoneywithtom.com. And that's just from 12:15 to 1 Pacific time. And please send in any questions, at asktom@talkmoneywithtom.com. And I'll be able to answer those and look forward to seeing you then. So thank you very much and have a good evening.